Nvidia and its CEO shared three markets that are going to grow dramatically thanks to the advancements of artificial intelligence. Can you guess the three? On today's episode, I want to do the following. First, take a closer look at the three markets. Jensen, the CEO of Nvidia, even said that one company is far ahead of the competition. Second, I want to take a closer look at price target updates after earnings. And finally, new revenue, earnings per share, and valuation estimates and expectations after earnings. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so obviously we have a lot of information that came out from earnings, and I've done a few videos already, but each video I want to talk about a new piece of information that we have received and try to kind of bring more light here into the AI space. So like I mentioned at the beginning, we saw three markets, or Jensen and the Nvidia team sees three markets where AI is booming. And right before the Q&A session, Jensen went through kind of a description of what was happening with the AI space. And he mentions that beyond cloud server providers, and right now, cloud server providers like your Google, your Amazon, your Microsoft are the big spenders here of GPUs. They believe that generative AI has expanded to three other markets. And he mentions that generative AI has expanded to the consumer internet companies, sovereign AI. So sovereign AI is not an individual industry, so we'll probably touch that in another episode. But he also mentions the automotive and the healthcare market, creating multiple multi-billion-dollar vertical markets for Nvidia. So these are three markets. Two of these markets, I believe we have been discussing a lot in this channel. And those two are the automotive market and the healthcare market. Make sure to check out my playlist of Nvidia Investor Book, I believe it's called, the playlist. And in that playlist, I actually have a video where I talk about the healthcare market and how Nvidia is really driving in that space. Maybe next I might do in the automotive market, because that's another very big industry. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. The CFO, during their explanation of the quarter, actually talked about two of those markets. The first market was the automotive market, and they mentioned that they support Tesla. They supported Tesla expansion on their training AI cluster to 35,000 H100 GPUs. This is one of the largest clusters of GPUs that I've seen so far. And they mentioned that their use of NVIDIA AI infrastructure paved the way for the breakthrough performance of FSD version 12, their latest autonomous driving software based on vision. So, I might have mentioned this in a few times in previous episodes. I recently got a Tesla about 2 months ago. And ever since we got the free version of FSD, I ended up trying it for a month, and now I am a monthly subscriber of FSD, and I think it is amazing. Obviously, there's still ways to improve, but as an engineer myself, I can definitely appreciate and see the evolution of tech. So it's pretty cool for kind of Nvidia to kind of give them a shout out. The second one, when we take a closer look at the consumer internet companies, they mentioned one big player. A big highlight this quarter was Meta's announcement of Llama 3, their latest, largest model, which was trained on a cluster of 24,000 H100 GPUs. I actually did a video maybe a few months ago where the CEO of Nvidia, Jensen Huang, mentioned that one of the biggest breakthroughs in AI of last year was Meta platform open sourcing their Llama large language models. So it does seem like Nvidia's CEO does have a lot of respect for both Tesla and Meta. They also did mention that they expect the automotive to be their largest enterprise vertical within data centers this year, driving a multi-billion revenue opportunity. So you might be wondering, Jose, why is automotive driving so much revenue for cloud server providers? And I'm going to explain about that right now. But before we go there, I want to share this tweet from Elon. And here we can see that Jensen is saying Tesla is far ahead in self-driving cars. So this is a huge shout out, in my opinion, from Jensen. Even though he works with a lot of different companies in AI space, for him to say this, it kind of solidifies the evidence that we've been doing in the past few Tesla videos, where Tesla is definitely an AI company. So this was from a Yahoo Finance interview that they had, and in that interview there was a lot of great information, and I want to highlight some of the things from the transcript and kind of discuss why the automotive space is so high in forms of revenue right now. And the first thing is, like I mentioned, to train this autonomous solutions in vehicle, and eventually this is going to go into things like robotics, into other types of autonomous mobility products, right? So you might think of just vehicles, but drones, right? Drones is another way to think about it. Like I mentioned, humanoid robots, robots at home for cleaning or for other types of appliances, for farming. So the robotics, the mobility market, autonomous as a whole, is a huge, huge opportunity in my opinion. And like I mentioned, right now they are learning from video, and video requires an enormous amount of training facility. And that's because the data rate of video is so high. So you need high computational power, which means a lot of utilization of GPUs, which means a lot of GPUs are needed for a long time. And that's why we see that the automotive market is expected to be a multi-billion-dollar industry for them this year. But not only is this important for self-driving, right? We are kind of getting into this world where a lot of companies are developing multimodality large language models. We have Google that recently announced their video model. We have OpenAI that has Sora, and all these models that are creating video generations, they need to learn from videos themselves. So not only are they going to have high computational power for training, but also for inferencing and generating the output of those videos is going to need high computational power as well. So right now, Jensen believes that the combination of this multimodality training capability is going to require a lot of computing demand in the years to come. So throughout the upcoming days and weeks, I'm going to start to do a lot more research on those three industries. Obviously, you guys know I'm very bullish on Tesla. I'm very bullish in a healthcare company that I've discussed in the past. And we do have shares here of Meta, but there might be other players in these spaces that we should keep a closer eye on. If you have any ideas, make sure to let me know in the comments below. Now, I want to jump a little bit more into price target increase. And ever since we saw earnings yesterday, analysts are working overtime, and we have seen a huge amount of price target updates. We can see KeyBank increased their price target of 1,300 from 1,200, Evercore 1,310 from 1,160, Stifel 1,140 from 1,085, Wells Fargo 1,250 from 1,150, Piper Sandler 1,200 from 1,050, D.A. Davidson 900 from 620, one of the lowest I've seen so far, that 900 value. We've also seen Mizuho 1,180 from 1,000, Jeffries 1,350 from 1,200. I think 1,350 is one of the highest I've seen. We see Wolf Research 1,250 from 1,200, TD Cowen 1,200 from 1,100, Bernstein 1,300 from 1,000, Morgan Stanley 1,160 from 1,000, Cantor 1,400 from 1,200. So 14 is another high one that we have there. Raymond James 1,200 from 1,100, Deutsche Bank 1,000 from 850, JP Morgan 1,150 from 850, Truist 1,288, such a random number, from 1,177, another random number, BNP 1,200 from 950, 1,200 from 950, Citigroup 1,260 from 1030. The list goes on. Susquehanna, I'm pretty sure I just butchered that, 1,200 from 1,100. Needham, 1,200 from 850. And the list goes on and on. We've seen numerous price targets come out throughout the day, but we saw that most of them are kind of within that 1,300 range. So something between 11 to 1,300 is where analysts are expecting Nvidia to be in the upcoming 12 months. Nvidia stock right now is sitting at about $1,040 as I am recording. Now we can see PE ratio currently at 87, PE ratio 4, which is the next 9 months, 38. PE ratio forward 1 year, which is about a year and 9 months from now, is 30. So even though the stock has jumped up dramatically, PE ratios hasn't increased too much. The main reason is analysts are increasing their overall estimates for the company. I mean, we can see just after earnings for the current fiscal year that revenue was probably expected to be below around $110 billion. Now it's expected to be $121 billion for this year. We can see for the next fiscal year, so about 1 year and 9 months from now, is expected to grow to nearly 150, and we can see how much of a boost it's happened after earnings. And revenue estimates for 2 fiscal years from now is 170 billion. Very similar, you have seen analysts increase their earnings per share, and that's why we've seen such a huge boost in price targets. But right now, analysts are expecting roughly $27.21 for this fiscal year and $33.67 for the next fiscal year. So we can see analysts are very bullish on the company in forms of earnings per share. They're all upping their revenue and earnings per share guidance, and that's why the company has seen a huge boost in price targets as well. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.